And welcome to this week's Market Update Report. My name is Dan Ludwig, Sales Director of the Shorewest Realtors office in Oconomowoc, Wisconsin. This week we're going to be talking some more about supply and demand after the tax credit has ended. The big question in real estate continues to be what will happen now that the home buyer's tax credit has expired. Did the tax credit kick-start a housing recovery? Would the momentum continue throughout the year? Any market is determined by the supply and demand for the product involved. Today we want to look at those two items as the first housing data after the tax credit is starting to emerge. So the first place we're going to look is supply. When we usually talk about shadow inventory and its effect on pricing, we are talking about distressed properties. These properties are REOs, which are foreclosures, short sales, and delinquencies. There's also a pent-up inventory of homes where sellers are waiting to see the market improve before putting their home up for sale. As the media reports our strong increase in sales this spring, a percentage of these homes will come to the market. Zillow actually released their first quarter homeowners confidence survey this week. And they asked the question, if you saw signs of a real estate market turnaround in the next 12 months, how likely would you be to put your home up for sale? 7% of homeowners, which translates to about 5.3 million homes nationwide, said they would be very likely to put their home on the market. 8% said likely, and 14% said somewhat likely. As we move to the demand side, and there's not much data available right now on the demand side since the tax credit expired just 3 weeks ago. However, in an article by CNN Money, Lawrence Yun, chief economist for the National Association of Realtors, predicted in the months immediately following the tax credit, we do expect measurably lower home sales. And also the Mortgage Bankers Association, their weekly application survey found that applications were actually down 27% compared to last week and 20% down over the past month, despite relatively low interest rates. The data continues to suggest that the tax credit actually pulled sales into April at the expense of the remainder of the spring buying season. So what does this mean to all of us? If demand is weakening and supply is increasing, prices will continue to soften. And please consider this when choosing the best housing option for yourself and your family. Thank you again for listening to this week's presentation. If you have any questions on today's report, please contact your Shorewest Realtors agent or contact myself at dludwig@shorewest.com. Thanks, and let's keep the market moving.